So, this week's market update, here's kind of the top 5 things I'm watching this week in the residential market in northern Arizona and beyond. So, interest rates and mortgage rates, that environment is changing. The slowdown kind of translates to buyer demand in a very interesting way. And what I'm watching is the Fed policy signaling future rate trajectory and the spread between conforming and jumbo loans. Why it matters, even with a small rate skew, it's going to push buyers into bracketed markets. So it's going to change how they're searching. So first time buyers versus luxury, and it's going to alter how quickly inventory moves. So what you should really be looking out for is, if you're a buyer, lock in after, a clear 15 to 30 day drop, and to see a favorable 30-year fixed within the mid 5 range or better would be killer. If you're a seller, price strategically in line with monthly payment realities for buyers, because that's what they're looking at. Emphasize, total cost of ownership in your listings. One thing to kind of look at is, as a KPI, is monthly mortgage rates, applications, rate volatility, all these days on markets to really help you script your price. The second thing I'm looking at is inventory. You know, the reality is, new listings versus older listings, days on market, and the quality of new listing supply relative to location, condition of homes, price, all these different metrics really help us understand kind of that fresh inventory can shift competition dynamics, especially in our Northern Arizona market, where, inventory within these different categories is a little bit tight. A key driver being price and how that drives momentum. So sellers preparing, through this window of opportunity where competition, may not be as tight for you. Price it cleanly, stage effectively, and really create urgency with value-driven, value-added concessions. For buyers, targeted off-market or soon-to-release listings, pre-inspections, strong pre-approvals. These become your competitive edge. And kind of the metric to look for here is absorption rates, listing to sale ratios, and then the average discount to ask on, fresh versus older inventory. Definitely something to be thinking about. The third thing, price discovery, kind of this is the pulse on the market. What I'm looking at are median sale prices by neighborhood, price per square foot trends, and the velocity of price adjustments, because we can't overlook the fact that adjustments mean we're probably priced too high. This matters because, in micro markets, behavior changes, neighborhood, areas change, and we have these macro trends that tend to change inventory, looking at different locations and communities that drive demand or lack thereof. So for sellers, pricing really attractively, thinking about interest rates, and creating a strategy to capture that lifestyle wow moment, whether that's staging, photography, or an open house plan that creates social media proof, right? And buyer buy-in. One of the things for buyers is looking at, realistically, deals are probably not going to be something that we're finding out there. Look at things that are sitting on market. That's where you're going to find your higher margin returns. And, realistically, it's going to vary by neighborhood. So the fourth, looking at luxury markets. So kind of the narrative being health, demand, and brand value. And what I'm thinking through on luxury is ultra luxury closings. Those are still pushing ahead. We haven't really seen a drop off in that. I myself haven't experienced it, and other agents in the area haven't either. And why this matters is luxury markets often lead to price direction and price stability in other segments. So adjacent segments tend to look there for kind of decision making. We have some very specific areas and regions that, if you're a seller thinking about investing in really high impact marketing, really solid 3D tours, telling that lifestyle, that storytelling, that is going to be how you continue to succeed in the luxury market. And buyers look for value within the luxury sector, such as development projects, pre-construction, where there's incentives, potentially properties with, some rare feature, some, view of the mountains in our area. That would be kind of those key indicators. And time on market for luxury listings, look there as a metric. Try to figure out, how many showings that may or may not have happened. That's going to give you some insight. And then kind of the fifth is the neighborhood playbook. So where demand is concentrating right now, and kind of what I'm thinking through, is these hotter neighborhoods, Ponderosa Trails and Flagstaff, continues to create returns. And you have these hot spots in sub markets, subsectors of the market where there's, location to better schools perceived, right? And this matters kind of within local dynamics. Realistically, local dynamics often beat macro trends, and thinking through neighborhoods that are highly sought after, and these different submarkets that are still thriving. So sellers, highlight those elements, highlight where you are, highlight the fact that you're located near a green belt, community amenities, different positive aspects. Buyers, think about lifestyle, think about walkability, think about long-term value tied to this neighborhood or where you're looking, and think about those growth curves that have traditionally been these elements to show us positive returns long term. Again, kind of just quick wins hopefully you can implement this week ahead, things that I've been thinking about, things that I've been having these conversations with my sellers and buyers to really maximize their returns. Again, just a beat on kind of what I'm thinking through the Northern Arizona market right now.